Hello, I'm Michael Graham, President and CEO of Midwestern Securities. Thank you for joining us for this episode of Banking on Growth. Today in Banking on Growth, we're joined by our friend Kraig Lounsberry, who is the President and CEO of the Community Bankers Association of Illinois. Kraig, thank you for being with us today.
Sure, Michael. Hey, thank you for having me. I appreciate it. I appreciate the technology of a podcast. I've not necessarily an expert at these, so I'll do my best. Just as a way of introduction, Kraig Lounsberry with the Community Bankers Association. As Michael said, I just celebrated my 15th anniversary with the Community Bankers Association in June. Started in June of 2008. Pretty much right before the crash. So I don't know whether I'm to blame for that or whether it was just bad luck or all the above. But I got a trial by fire on banking issues as the economy did what it did in 2008 and all the way in through probably the next several years. I started up. I'm not a banker by profession. Most time I've spent in a bank has either been talking to bankers or doing my own personal banking. I'm a government relations person. I started with this working after I graduated from Knox College in 1992 as an intern. I worked through various processes of state government, including some time in the governor's office, Secretary of State's office, some individual state agencies, and I've worked for some private companies as well as government relations. So I came to CBAI as the Director of Government Relations in 2008, held that job for about 10 years when Bob Wingert, who was then the only CEO, he basically stood this association up back in 1974, decided he was going to retire in 2017. So on January 1st, 2018, I became the CEO and president of Community Bankers Association. So been doing that now, obviously, for 5 years. And like I said, I enjoy the work, but most of all, I enjoy the people. Community bankers are some of the best people on the planet. Our leadership bankers, are no exception. I've been in other trade associations, and it's that whole 80-20 number where 20% of the members of the association are doing 80% of the work. You still have, all those other members, but the leadership bankers do a lot. So again, I'm grateful to be working for such a great group of people as community bankers. It's no wonder why community banking is a success when you know the people that I know. So that's kind of my history and background.
Hey, that's really good. You're the right man for the job at the right time. We're thankful for our relationship with CBAI. Midwestern Securities has been involved with CBAI for probably north of 15 years, and we've known you for most of that time, and thankful for your involvement and leadership there as well. So we're big fans of being involved in trade groups and associations, and basically have the perspective that they need to provide at least two things. One, political advocacy for the business community, and two, networking events. And I have from firsthand experience knowledge that CBI does that well. But will you share with our audience a little bit more about who the association is, how many members you have, and what value add you bring to them?
Sure, absolutely. We have currently, our membership number kind of bounces up and down. We're at 270 members, which, just as a side note, something else we might discuss a little later in the podcast, is down from the high, maybe 13 or 14 years ago 15 years ago when I started. We had over 500 members. Most of that, the vast majority, I'm going to say 98%, is due to merger, acquisition, and in some cases failure back during the Great Recession. But we still have 270 members. That's still one of the largest trade associations in the country. We might be third or fourth. I think we might be third behind the two Texas associations, but we're somewhere in that range, as well as the number of banks. In Illinois, our 270 members account for about 72% of the banks chartered here in Illinois, both state and national charters. And we have, as you mentioned the two things that a trade association must do. We do both of those. We're a kind of a three-legged stool, and I would put the networking events in one of the legs, which is, or two of the legs, at least maybe all three of the legs. Advocacy is why CBAI was stood up in 1974. There are a group of bankers that weren't happy with the way community banks were being treated. In the other, bank trade association, there was a committee set up, and they decided it had to do with branch banking and ownership and all that. The arguments with some of the larger banks, and so they split off. And it was 100% advocacy. Back in the day, there were one or two employees, and that's what CBAI focused on. Over the past almost 49 years now, we'll celebrate our 50th anniversary in February. We've expanded to more offerings. We're now, as I said, kind of a three-legged stool: advocacy, education, special events, kind of in that leg, and services. And the networking events, as you mentioned, are a part of all three of those. We do on the advocacy side, we do an annual Call on Washington, where we take bankers out to Washington, D.C. and participate with the ICBA to advocate on behalf of community banks. We do a state capital conference, which is down at the state of Illinois, in Springfield, Illinois, where in some cases we go to the Capitol. Over the past few years, we brought legislators to us. We do legislative roundtables. We've on our second one scheduled for maybe either next week or the following week, and we try to do at least 3 or 4 of those, where we bring bankers and legislators together. Government relations team sponsors that, and we just try to create that great grassroots environment for community bankers, and legislators. So that's part of the advocacy. And then we have, on the education side, we have our convention, which is our marquee event every year, where we bring, probably about anywhere between 250 and 300 community banks, along with vendors and partners and speakers and other participants and spouses. And we'll have over 500 people in Indianapolis this year. We hope, for that great venue. And that's, a great time to fellowship and peer discussions and things like that. We also, ingrained in all those events, like with our directors conference, we had, set aside time over lunches for peer discussion. We have a banker school, we have a C conference, and all these are special our group meetings, where we do 11 of those throughout the state. Every year, and basically in all parts of the state, all the way down from Marion, all the way up. We do, one in Chicago, where we combine groups 1 and 2, and Lanark, all the way up in Western Illinois. So we're everywhere in between. And all those events, have a advocacy where we're talking to our bankers about, what we're doing for them, and, they're giving us feedback. An education component where we have either speakers or education events, and time for bankers to basically network. And that's, during the dinner and during the cocktail hour and during the golf outings and things like that. And then we have the third leg of our stool, which is services, where we provide, a great list of basically any service from, we have, as we have preferred providers, which MSTC is one, for our 401k, our MET program. And we have just associate members, and we try to bring bankers together with solutions through these, both associate members and especially through our preferred providers. We have those long relationships with some, as you said, you're, 15 years with CBAI. I think this year we're celebrating the 40th anniversary of the Baker Group, which is one of our longest relationships. I think we're celebrating 35 years with a couple of other of our preferred partners. And so it's, we've been doing this for a long time too. So an association that was stood up solely for advocacy has grown over the years to provide all those, necessary, and bankers, are members for different reasons, right? I mean, some bankers are members, some banks are solely for advocacy. They think that they need a standalone voice for community banks. Time and time again, that's been proven over different issues. Some bankers are in it, they think the advocacy is great, but they love our education offerings, and they love our CEO forums, and they love our marketing forums, and all those other things that give them a chance to network with their peers at different places and different levels. And some of them love the fact that of the services we offer. I mean, we've actually, brought members into, membership because of, different services and discounts and things that we offer on those services. And, all those services are vetted through our 34 banker Service Corporation Board, which meets every other month to discuss new services, old services, whether we need to, revamp on a service, talk about preferred providers, bringing other people in. And so it's truly banker driven. It's not just us thinking we know what's best for our banker members. It's our bankers coming to us and saying, hey, this is what we need. find us a solution, we'll vet it, and we'll tell you if it's the right company. So kind of a long-winded answer to your setup question, which is, those are the two things that we need to have. What else do we do? We try to do it all. We're fortunate enough to have a large staff. I think we have 22 people on staff now, which is, there's probably only 3 or 4 other community bankers association that have anywhere near that kind of staff. IBAT being one of them. A lot of my counterparts in other states have to try to do what they do with only, 2, 3, 4 people on staff. So I am very appreciative of the support we get from our bankers and the abilities that we have to provide those solutions to Illinois community banks.
You bet. That's a great background. Thank you, Kraig. Yeah, the Community Bankers Association of Illinois is very active and a very strong organization. And like I mentioned earlier, we've experienced that firsthand, being part of it, being at many of the events that you referenced, and having you and other leaders at some of our corporate events as well. So that's 100% accurate. The community bankers are in a unique place to outcompete the SoFis of the world, and I think the vendors that will rely on AI of the world, because of this number one component, the proximity to their customers, being close to their customers, staying close to their customers, and being able to have eyes, ears, the human element to interpret what's happening in life events in our customers and our communities. And so I think that because of that proximity, being close to the customers, community banks have a unique advantage if they leverage it all the way through the customer relationship. And I think that Midwestern Securities has that relationship also. We're privately held in the Midwest, owned by bankers and financial advisors. So I think that gives us a competitive advantage. And I think that CBAI being so close to their customers, the banks that you just expressed through those different venues, gives you a unique opportunity to listen to what's important to your membership and to build programs that you just laid out. Kraig, if I had to ask you, maybe the number one or top 3, however you'd want to approach this, challenges facing community banks today, what is it? What are they?
Yeah, I mean, that's a good question. I wish I could just limit it down to 2 or 3. I mean, there are probably some you could, I would say that any individual community banker would probably tell you that of the 5 I'm going to lay out or whatever, maybe 5 is number 1 for them, maybe 1 is number 5 for them, and vice versa. But there's just, community bankers have been facing, challenges their entire careers, and they rise to meet them. But you still have, you mentioned some of it. You mentioned the non-banks. The fintechs that are out trying to take bank business. You have the fact that we believe that there's an unfair competitive advantage for credit unions and the fact that they don't pay taxes. It's the too big to fail banks that have just basically a leg up on on their advantage. That especially when you start competing for deposits, that they're too big to fail. And, anybody that's coming in and going to put uninsured deposits in a large bank knows that those deposits are going to be safe because they know they're not going to fail. You've got succession planning. You've got, issues where community banks that have been around for, hundreds of years, and sometimes they've been family driven or locally driven, they're having trouble finding, that right person to either stay in that small town or come back to that small town or run that bank. And then you've got the different market issues that are, that if 2 years ago were totally different than they are today. Now banks are looking, having liquidity challenges and looking for, deposits, where 2 years ago you couldn't give them more liquidity. They didn't want any more deposits. And so it's, and that's a challenge that's spread across all specters of obviously the banking world, but it hits community banks maybe a little harder because they have a tougher time in trying to find, solutions to all those. What I will say is that, community banks are some of the most resilient people, and community bankers, the most resilient people on the planet. That's why they're small, they're nimble, they're able to move quickly and do things. They don't necessarily always have to chase deposits. The fact that you mentioned their success is that they are so close to the customer. When somebody comes in and says, "Hey, I saw there's a 5% rate down, over at, one of the broker firms or something like that. Can you match that?" Well, no, we can't, but you have all your accounts here. How about we can do this? Yeah, I don't want to move my money. I'm happy to take take a little bit of a haircut just to make sure I keep everything here and keep it with you, because they walk in and they don't just talk to a teller, or a banker. If they can see the president's office over in the corner, and if they need to go talk to the president of the bank, they're going to get an audience with the president of the bank. And and that's why I mentioned fintechs and non-banks. I mean, those are obviously challenges, and it's broadening especially with millennials who don't want to do anything in person, and community banks are relationship lenders and in person, and we need to find a way to get to those. And the answer isn't to basically tell those people to go away. The answer is to find the right fintechs to partner with through technology, and to try to make sure that we're able to to keep that market and gain that market. And COVID kind of fast track that, with mobile banking becoming a huge issue, and it forced maybe some community banks out of their comfort zone and into having to find solutions in order to solve that problem too. So, again, I listed several of those. I mean, they're all an issue, and on any given banker, I mean, tons of bankers, you could probably think of all 7 of those issues or whatever, and you could probably name 5 bankers that we're going to rank them totally different, just through your relationship with them. I mean, that's just what it is. But I mean, it's not easy to be a community banker. I mean, that's what makes it even more impressive, because on any given day, a community bank president has to be an expert in HR, an expert in, has to be a legal guy and able to read a contract, has to be a lender, has to be, have, deal with customers, and then they got to go out in the community and do that kind of stuff out in the community too. So it's a busy job. There are lots of challenges. We're here to help them with those challenges. The independent community bankers, at the federal level, is there to help them with the challenges. Our great preferred partners like MSTC and all those other preferred are there to help them with challenges. That's basically why we're here. If community banks didn't have challenges, they wouldn't need CBAI. I mean, that's just the bottom line. If life was easy, they wouldn't need a trade association at the state level and the national level to advocate and provide all the solutions that we do. So we're going to continue to work through these challenges. It's not we know that our base is not growing. We're going to continue to shrink. That's just a fact. I mean, there's been more and more de novos over the past couple of years, but we went a long time without a de novo bank. That's probably not going to outpace the new banks that are going to be set up, are not going to outpace the mergers and acquisitions. But we're prepared to, and our banks are going to grow a little bit bigger, but they're still going to continue to, meet the needs of small towns and especially small businesses. So again, all these challenges are tough. And I'm not going to say that there aren't community banks that are fed up. I failed to mention was regulatory, overreach. I mean, that is, I hear from bankers every day that, the regulations is one of the reasons that, they're just sick and tired of banking. They spend 80% of their time trying to figure out how to keep the regulators happy, and they don't have enough time to figure out how to, serve their customers and keep them happy. So all those things we try to help mitigate. We know community banks are going to continue to work through them. And that's just what they've done for 150 years or 60 years or however long community banks have been. That's the beautiful thing. Community bank wasn't, they weren't set up by these, huge businesses that decided they wanted a bank. They're usually set up by a couple, 3 or 4 people in a small town that decided they needed a bank to compete with the big banks back east or whatever. So that's. The community bank's not going away. There's a lot of people that for a lot of years have been trying to say the community banking is going to go away, and some of these challenges there may be examples of why it's going to happen. But I think this is our economy is one of the best in the world because it's one of the only in the world that has a great community bank. I think maybe a presence. I think maybe over 4,000. I can't remember the exact number. I probably should have had that number for the podcast. But I know that number shrank over the last 20 years. But we still have more banks than basically any country, probably any 10 countries in the world, and that's what makes it. That's what makes our financial system great here in the United States.
Yeah, absolutely. Good points. So you mentioned a few challenges, right? Technology that ties into competition, the too big to fail, the credit unions. And then you got into succession planning, which is aging out of leadership, aging out of boards, and you touched on talent in general. What is the CBAI doing to help with succession planning and that development of that talent pool locally?
Sure. I mean, we have our programs that one that's been around forever. It started off as the YBD, the Young Bankers Division. Now it's the CDD, and basically what that is how it was stood up was, I think now maybe 35 years ago or 36 years ago, whenever the first 35 years ago was the first graduating class of the bankers school. These young bankers that had just graduated wanted to try to figure out a way they loved the networking opportunities, and they wanted to figure out a way how to continue to do that and grow and meet with their peers. And so they developed this Young Bankers Division. The CDD now does that. We have close to 200 members. They get together twice a year to have events, but they're also they're networking and working with each other to try to solve problems, and it helps them grow as they're into leaders. I mentioned the Bankers School. That's a 1 week for a year, for 2 years, to be a graduate of the banker school. And that's how, banks that want their, maybe their younger, individuals that they, need to move up and be, either senior lenders or something along those lines, they start them off in that process and they send them to banker school. I mean, that's a huge commitment, both by the bank sending somebody out for a week, back-to-back years, and a banker having to go to the community banker school for a week, 2 years in a row, away from their family and everything else. That's a way to continue to grow and nurture that. We have a leadership academy, which tries to take some of these bankers that are identified by kind of community banks and teach them leadership skills, so they'll be the leadership of tomorrow. I mean, we know that especially now, that the talent pool is stressed and limited, and community banks are going to they have to compete with the largest banks in the country, but they also have to compete with state governments and regulators and other businesses to try to keep and retain talent. And bankers always complain all the time, and they train somebody, they train them up, they think they're going to be the next person, and they move on and take another job, and that stinks. There's nothing we can do about that, but we do help them get to that point. I think probably the best thing for the community bank and acquiring talent is the fact that they're a community bank. You become a great place to work and people don't want to leave. I see it here at the association. We have a lot of people that have been here. There's probably only 6 people on staff that have been here fewer years than I have at 15 years. And that's just because we had people that recycled off after, being here for 30 years and had to retire. And that's the same thing with community banks. You see all the time they're someone celebrating 30 years in banking, 40 years in banking, 50 years in banking, because they create great atmospheres to work in. As I said, we try to help that through education and through, other programs and mentoring and things like that. But, at the end of the day, it's tough. And I get it, and they see it, and we hear it from banks, and we're always looking to do more. We've talked to bankers about some ways that we might be able to, do some additional things with universities and colleges and things like that. So, maybe more to come on that. But, at the end of the day, it's, that's a challenge we all face. But I think a community bank kind of speaks for itself, when it comes to, environment, as a great place to work.
Mm-hmm. I agree. You mentioned 2008, 2009 a couple of times, the Great Recession. Ben Bernanke in 2009, Jackson Hole said that banks need to diversify their income sources. Do you see, what percentage of banks would you approximate have done more than just traditional banking, taking deposits, making loans, are into other non-interest income businesses?
Yeah, I don't know that I would know a percentage. I can tell you that probably not enough. I know that we obviously you have a program there with your investment side, where there in many of our community banks, outside of the BEP and the 401k. That's a great venue. I know community banks have done it, and a lot of them are doing it. I think a lot of them, are maybe trying to do some of that through technology and other ways like that. But it's clearly something that, in order to, you can't, as we know, there's an attack on fees right now. Community banks made a lot of income through fees. there's just a flat out attack by the federal regulators over fees, overdraft fees and any kind of fees. I mean, they call them junk fees, even though we know they're not junk fees and they're not even close to being a junk fee. We also know that eventually, and I'm talking 10, 15, 20 years down the road, interchange revenue is going to be challenged. With FedNow and other technologies, and bankers are going to have to look for ways to get non-interest income to replace some of those sources. So, it is definitely still a challenge. I mean, I know banks, we talk to banks all the time about doing it. I know you talk to banks all the time about needing to diversify and ways you can do it. And it is still a challenge, I would say, for community banks. But, a lot of them are moving into those ventures. And then there are probably banks in some parts of the state that just don't need to, right? They're a small town bank. They've got the small town customer base. They're not interested in doing anything else. They have a local guy doing the investments and not interested in competing with him. And so, those bankers are going to be, viable as long as the town's viable and the people are supporting them. But, I would say for the most part, yeah, I mean, bankers need to start considering, the fact that, maybe just a traditional banking revenue is not going to be, enough, down the road.
Mm-hmm. Right. So maybe the last question, I'm not promising it's the last question, but maybe the last question for now is, if you had a crystal ball, what does the product and the service experience look like for a community bank customer in 5 years?
Yeah, now we're getting into technology, right? So about, and I have to go back a couple of years to go forward. About 2 years ago, we started seeing all this movement out of the ICBA and their incubator and the fact that they're bringing fintechs in and working with them, and we decided we needed to be a part of that. So we created an innovation committee. Basically 2 years ago, I think maybe 2 years ago, and that the June committee had their first meeting in October of 2021. And one of the first things we did, after we met and decided that, we needed to figure out ways in order to find community banks better technology in order to do their job, is we went down to, Arkansas, and we went through the incubator process, and we met with the Bank Tech Venture Group and did all those kinds of things. And I would say that we haven't, stopped on that since. And we have a great committee that's, I think they're meeting, maybe once a month now, at least informally, talking about new companies that can, help community banks, and, in all different, services and ways. I mean, 2 years ago, there was no community bank needed to look for deposits. I already discussed that. ICBA just had their latest cohort, they call them, about the 6 or 8 companies that go through and they become their cohort of new companies, and 2 or 3 of those were on deposit, going out and finding deposits and deposit production, and so that changes, and so what we try to do is we try to stay ahead of the curve, and we try to focus banks on the fact that innovation, fintech doesn't necessarily mean bad. You get fintechs that you can partner with, and they're going to help you going forward. I mean, the traditional. I mean, we know that I probably go into my community bank. I'm an old timer. I probably go to my community bank once a week. There's probably folks that don't go into the community bank once a year anymore. And so the community bankers have to figure out ways to reach out and grab those customers, through the products that, we go out and find through innovation. And that's really, I would say, our innovation has really been our innovation committee, and the fact that probably the last 7 or 8 preferred partners have all been driven by these young new companies. And there's some, occasionally there are some, it's not as easy as using a company that's been around for 20 years. There's some growing pains, and community banks have to, help some of these companies work through some of the issues, because they're almost becoming like beta banks for some of these companies. But, I would say that these young upstart, fintechs that are providing services that community banks, maybe don't know that they need today, but they need, they realize in order to compete, they have to utilize some of their services. So that's really what we've been focused on, as far as services going forward. Obviously faster payments. The Fed just stood up their Fed Now, their faster payment. It's kind of we've had a lot of information on faster payments. Everyone in our group meetings, as Shazam spoke about faster payments. We kind of joke about it. I mean, faster payments has been around forever. The fastest payment on the planet is me handing you a $100 bill. I mean, I give you the money and you can spend it immediately. I mean, that's a faster payment. That's the fastest payment, quite honestly. But, that's not what this process is about, right? I mean, I would say the Fed Now faster payments is more about settlement than actually a faster payment. It's how banks settle with each other as opposed to, there's all kinds of products out there. And before Fed Now where, I could instantly, send you money and you could instantly get the money. But that's, the bank basically fronting the money until the two banks settle with each other. And that's, really what it's become is a settlement for banks. But now banks have to figure out how they can and should use that in order to retain and maybe even grow their customer base. And so, obviously technology and things like that are going to be driving, how banks act, over the next, decade or more. I mean, obviously going forward forever. And we don't know what's coming down the pack. Nobody probably would have said, 10 years ago that the Fed Now was going to stand, or that the federal government, Federal Reserve is going to stand up a Fed Now, a faster payments network, this year. But, obviously it happened. And so, 10 years down the road, there'll probably be something new, out there. And, our job is just to try to stay innovative and try to stay out, at least, if not out in front of the curve, at least out even with the curve so we can, help our bankers compete.
Good response. Kraig, well, this has been great. We really appreciate your leadership at CBAI. We really appreciate the business advocacy, networking, business building opportunities that CBI presents the bankers and the members, the associate members like Midwestern Securities. So thank you for all you do and all your association does and for joining us here today. On behalf of Midwestern Securities and our Banking on Growth team, thank you for watching this episode. We hope to see you at our next episode. Thank you for joining us today.